Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, and this is the 11th of February, 2024. If you have friends that are in the Midwest, they might be snowed in tomorrow. People might have a very difficult time getting to offices if that's where they're going. Somewhere between 6 and 8 inches of snow hitting the region, some areas 9 inches. So this will be the biggest snowfall of the year. And for Chicago, probably the biggest one in a couple of years, if it comes in, and that's always the if with the weathermen, if it comes in the way that they're saying. So things you got to keep your eye on. Before we get too far, let's take a look at what we have tomorrow. You're going to start off the morning with the Mortgage Bankers Association. Then you're going to go to the CPI numbers. The eyes here are going to look at about a 3%, 2.9 to 3% key numbers. Those are what you want to keep in the back of your mind. Fed Chair Powell, day 2 tomorrow of testimony, this time in front of the House Financial Services Committee. And the API numbers, you had a big build in this number. EIA today came out with their numbers, and they think that Brent will hang around the 74 level this year, but they're looking for $66 on an average next year. Now, remember, these things all change around. They are thinking, though, that what's going to happen down the road here is that the market will stabilize and OPEC's going to say we can live with $65 to $70 Brent. Let's put more oil on the market. They're also looking for an increase, not a huge one, but an increase in U.S. production. Very minor, maybe 300,000 barrels a day, but they're still looking for that to be the case as well. So the market's digesting that right now. Bonds and notes tonight, well, everything's going to wait on the CPI number in the morning, and then you'll get your reaction. The other thing we're all waiting on, and I haven't seen it yet, is Trump going to sign more executive orders about tariffs. I don't know. I have not seen anything on the wire so far, and I waited for this long to see it. He said it would do it Tuesday and Wednesday. We are about to find out. But as you could see, the market staying here. But the rally that we've had on the interest rates haven't really affected the stock market very much. It certainly hasn't slowed the gold down. There's some profit taking hitting the market right now, but that's all that I could call it is profit taking. I mean, it's still at an all-time high if it were to close here. So that's good news. If you look at the currency markets, they're just back and forth right now. They don't know if they should go up, down, sideways. A lot of volatility has come out of the market. I was reading how some trading desks around the world have been gearing up for more volatility in them. It seems to me the volatility has gotten very quiet in the currency market all of a sudden. So as we take a look at the S&P, you can see that you're up right now for the week. We're into Wednesday's trade, about 0.75 percentage point, not very much, but staying over the 18-week average. So the bias is still to the upside. Are we going anywhere? We haven't. I made that clear to you yesterday, and I'm still saying that. And when you look at the pattern, you have lower highs. Now, with the current action, we've now established higher lows. So think of the downtrend there, the uptrend coming this way, and you're forming that wedge circle right in here. And that's what you're doing right through there. So the narrower it gets, eventually you break out one way or the other. Is there an edge right here? Well, when you put moving averages on, the answer is probably no. You're just hanging at that 18-day average of closes, be it that you're up tonight 10 points over it, or intraday, you're right on it. You're just hanging around there for the moment. What else happens when you get that pattern that goes like that? The Bollinger Bands start narrowing in. And that's a sign that you're losing volatility in the market. And that's what's going on for the moment. All right. You know, this is the futures market. Nothing stays without volatility very long. I laugh when I say that, but it's the reality of the situation. So I'm calling the trend right now flat. Market looking for direction in that. When we take a look at momentum, it's corrected past tense out of the overbought condition, did its business getting back down to these averages, found its support at the 100-day average, has not been able to regroup and get up to the upper Bollinger Band. It doesn't mean it can't happen. If you take out the high back here 4 days ago, then wherever that Bollinger Band is, currently around 61.49, that becomes one of the targets, if it can do that. If the market takes out the low in the NASDAQ here, it would regain the momentum that it's losing. Remember, it's come back to the 18-day average and really refuses to stay under it. So while you have the pattern of lower highs, now you've got higher lows. You do see that. So just like in the S&P, hanging resistance, upper band, support back down here, the combination of the lower band and the 100-day average, again, a market that I just see drifting. The Dow, need I say any more? Look at how it's drifting here at the 100-day average. You're narrowing in the Bollinger Bands. It's the same story. And it's basically the same in the Russell as well. You have here, difference is a higher high. Got that? But now you're trying to establish higher lows with it. So you're trying to say maybe you can get something going, and yet it's staying under the 18-day average. It's a difficult market. In the notes, all of a sudden, look at how you've narrowed in the Bollinger Bands. So you've taken the markets down like this. What has really happened is since the president has started putting on these tariffs, you've taken the air out of some of these markets. Traders are looking like this at the marketplace going, okay, he puts on these tariffs, he gives them time to negotiate, then what happens is maybe he doesn't keep them on to that 25%. How do I deal with that? That's what they're saying to themselves. And I think that's what the president is doing. He wants to put on the reciprocal tariffs to get the other nations to say, let's meet in the middle, or let's do something here that we can get this fairer for you. That's the goal of this whole thing. And we'll see if that works out. In the 2-year notes, the lower you fall, the higher the interest rates go. And you heard the Fed chair today in front of the Senate Banking Committee admit, he says, the Fed does not have control over longer term rates. That's based on perceptions of people, the economy, ideas. Where's inflation going to be? How are the economies of the world going to be? There's so much that goes into it. What they do impact, the 2 years, the 6 month, the 3 month, everything short term, they do impact. And the Fed chair made it very clear, they're on hold. He made it very clear he's not ready to criticize or even discuss the president. They stay in their own lane. They do their own thing. Do they know what the tariffs are, good or bad? They don't know. They haven't seen enough of them to know what's going on. The dollar, too, is sort of caught. It's got the swing line up. The buy is down. It's fought now a couple of days, 3 days in a row at the 18-day average and just sort of in middle road. Now, you're still in the bearish camp in the euro, as the market does have the swing line down. It's staying under the 18-day average. The pro traders probably selling this at 104.10, which stops right over where my finger is, the high right there. That would negate the trend. In the British pound, you need to stay under the 18-day average, and the market refuses to do so. When it does and finishes that way, then you've reestablished a downtrend if it stays like this. Now, certain people in Europe are saying and calling for the British pound for the rate cuts to not get out of hand here. Ms. Mann is one of those people. And, if you were reading today, Bloomberg, there were many articles on it as to why. I think she was the outlier calling for 50 basis point cut. It's not that she necessarily wanted it. I think she's wanting to make statements about what she thinks. Bitcoin, as you know, I've been looking for a retest of the, well, you may not know. I've been telling this to my mornings people that come into my subscriber video, the paid subscriber, and I was looking for a challenge of the lower band. I'm pretty well getting what I wanted there. In the crude oil, still acting bearish. I mean, tariffs are not bullish economies. Remember that. I know what you'll hear, and people will say they pay for themselves. I am not in that camp. I think we pay for them. I don't think that they pay for themselves. And I think you're seeing that in the people wondering about demand. WTI stronger than Brent. You can see how it's come up while the Brent has gone down. And this cold weather spell we're in again should give demand to heating oil and to natural gas, which are both doing exactly that. Is the colder for longer makes you burn in order to heat. It's pretty simple way you work with that. Now, I know a number of you, when you look at these charts, some of you work with TradingView. I don't know if you're aware of it, but we work with TradingView, and I've put my whole suite of indicators into a package for you. So you go to iraepstein.com, our website, and from there, all you do is on the very top, you'll see client resources. There's also an icon that I have up here. You give that a click. You go in, you fill out the paperwork. We turn it on. They don't turn it on. We turn it on. You log out, back in. We send you an email as soon as we've turned it on for you. Away you go. A lot of people seem to like this, and it gives you all the different indicators I want with my formulas, which are a bit different, but you get the swing lines, you get my version of doing the slow stochastics and how I work with everything. And it lights up, by the way, for outside days, which I think are so important. You go to iraepstein.com, client resources, top right, or move your cursor here. I'll catch up with you either in the other videos tonight, or I'll see you first thing in the morning as we put out the morning flash update. You take care.